Joining me now for more on what to expect in today's session as this week rolls on is Chris Versace, Chief Investment Officer at Tematica Research and Portfolio Manager for the Street Pro Portfolio. Chris, it's great to have you in studio.
Thanks for having me.
Now, we're mid-earnings season. It's indicating a lot of how various industries are doing. Talk to me about what the biggest takeaways so far for you have been.
I think by and large, earnings season has been better than expected, but we've also seen a fair amount of companies that have only just delivered what the market was expecting kind of come under some pressure. So it really tells us that, no surprise, given the run-up that we've seen in the marketplace, in order for a stock to really move higher on a sustained basis, you have to kind of deliver that upside surprise. But I think in terms of areas that we're seeing strength, there were a lot of questions around big tech earnings, but what have we seen? Very strong numbers, in my opinion, out of the tech sector, really reinforcing the fact that we are early innings on AI adoption. And I think when we look back, we're going to say, wow, not only was AI adoption strong, so strong that Microsoft, Google, and others were capacity constrained, but we're going to continue to see the flow through of strong capital spending to areas that folks were having a lot of questions on, like, for example, NVIDIA.
And all eyes are going to be on Amazon's earnings later on this afternoon, but does competitor Google's parent company, Alphabet, their earnings are going to be released on Tuesday. Talk to me about how it's going to paint a picture on how Amazon's cloud business is doing.
So I think the big thing that we've learned, right, between Microsoft, which said back in September that, hey, we're capacity constrained, right? We're delivering 30% revenue growth, but we can't do any more because we need to bring more capacity on over the next 2 quarters. So they telegraphed, rather large capital spending for their fiscal 2025. Flash forward, they reiterated that, and then on top of that, Google delivers very good cloud growth, but they too are capacity constrained. So you step back and you say, wow, this AI adoption, it is happening. We're still in early innings, but it's probably happening faster than a lot of people realize. So when we hear from Amazon tonight, if they say the same thing, which I suspect they will, it's going to mean that they too are going to be lifting their capital spending expectations for 2025. So all in all, robust data center growth, robust cloud growth, robust growth in AI and cloud services. So all very good for big tech earnings in 2025.
Speaking of big tech and Amazon's platform, I do want to ask you how you think the implementation of these tariffs between the US and China will impact this sector, specifically, broader e-commerce companies like Amazon.
Well, I think it's a great question, right? Because when you look at Amazon, one of the areas that they've been very successful in has been fashion. Right, and really taking that from traditional brick and mortar retailers. So it is something that we're going to have to watch on their earnings call. I suspect, though, that given President Trump's comments since the election about the potential tariffs, that we've probably seen some pull forward, not just by Amazon, but probably by Costco and others as well, to get ahead of this. Because again, it's an uncertain thing, and they will prepare for that, just like we saw in the fall with the potential dock strikes.
And another company that you've been following closely has been Qualcomm. Talk to me about the biggest takeaways here and how you think your insights have impacted the broader macro market when it comes to smartphone and AI PC markets.
So there's been a lot of questions about the tone of the smartphone market, the tone of the PC market. And I think as we look back from comments from Taiwan Semiconductor to Han Hai to other key suppliers that have already reported, we are going to see a nice mid-single digit growth in smartphone shipments this year, more likely skewed towards the high end. So that bodes well for Qualcomm's business, as well as others in the supply food chain. But the key for Qualcomm is this, Trinity. They are diversifying their revenue stream in a very important way, right? We know that Apple is planning to slowly bring in their baseband, right? Leveraging Apple Silicon, doing it in-house. So Qualcomm has been preparing and telegraphing its move into other markets, notably the AI PC market, IoT, and automotive. And when we look at their earnings report last night, their guidance, they are delivering on that diversification strategy.
And in addition to earnings, investors are also watching closely the January jobs report that is coming out on Friday. But I anticipate, well, you're anticipating a positive reaction. So talk to me about.
Well, I'm anticipating a stronger print than the market consensus. So if we look at it, the current consensus right now, I believe, is around 170,000 jobs. That's down from 256,000 in December. But here's the thing. We look at ADP's numbers, right, for January, stronger, right, and up sequentially. We take a look at the January PMI numbers, whether it's S&P Globals or ISM, it doesn't matter. The fact is that they both showed sequential improvement in employment. So it tells you that we're likely to get a stronger print than the market is looking for. Better than 170, if it's better than 256 or 250, stronger month over month, that is going to be a hot number. Great for the economy, right? More people working, more people earning real wages. But from the Fed's perspective, they're going to be like, we don't need to do anything because the economy is humming.
But if your prediction is correct and estimates come up above what investors are anticipating, how will that impact the Fed rate cut later on this year?
Well, I think you have to remember what Fed Chair Powell had to say, right? He said, we need to see sustained progress back towards 2%. So sustained is the key word there, meaning it's not going to be 1 month, 2 months. They're going to want to see 3 or 4 months, especially when you trace the data back, right? It's kind of noisy, that sort of thing. So they need to see it moving sustainably, and I suspect they're not going to hang their hat on any one indicator. So seeing a lot of different data in aggregate move that way. You know, you look at the timing, right? So if we get a very hot print on top of the inflationary pressures that we saw in the PMI reports, I suspect that the market's expectation for a June rate cut is going to get bounced back into the second half of the year.
A lot to look out for. Thank you so much. Again, Chris Versace, Chief Investment Officer at Tematica Research and Portfolio Manager for the Street Pro portfolio. Thank you for joining us.